Welcome to this session in which we will discuss the three types of audit that can be performed by a CPA. And those are operational audit, compliance audit, and financial statement audit. Now, in this session, what we will do is we would look at the definition of each type of audit, what does it entails, and we give an example from the real world just to kind of make sure we can relate the definition to what actually happens. We're going to go ahead and get started by looking at the operational audit. Before we proceed any further, I have a public announcement about my company, farhatlectures.com. Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses, broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today. What is an operational audit? Operational audit assesses the efficiency and effectiveness of an organization operational procedures. Now, because we said operational procedures, it could be about any operational procedures. So notice the operational audit extend beyond accounting. It encompasses areas like organizational structure, computer operation, production, marketing. Basically, we are looking at anything in the company that we want to assess its efficiency and effectiveness. Efficiency means, are we doing this at the lowest cost possible? And effectiveness is it reaching the goals that we are setting up for this procedure? We want to evaluate both. Is it reaching its goal, and is it at the lowest possible cost? So given its broad scope, because operational audit can assess any procedure, a typical audit procedures that's considered operational audit can vary significantly. Sometimes we might be assessing the data used by a company to purchase asset for the asset acquisition decision. And other times we could be looking at the efficiency of sales when it comes to the information processing. Because of that, this type of audit is considered subjective. What does it mean, subjective? Subjective means it doesn't have clear established criteria. In contrast to what we'll see later, audit, compliance audit, and financial audit. Compliance audit and financial audit, usually they have a standard, a criteria, certain benchmark we look at and we compare our work to. Well, operational audit, we don't have this. That's why it's mostly subjective. We're going to see compliance and financial audit. They have established criteria, such as using generally accepted accounting principle or the Internal Revenue Code. Operational audit is most likely, it resembles a consulting engagement rather than a traditional audit. Let's take a look at an operation audit. Well, basically, maybe an objective will be to assess the efficiency and effectiveness of the inventory management system. That's it. We're looking at management, the inventory, how do we manage inventory, and specifically at a warehouse in Mexico. So notice, it's not across the company, it's for one specific area, and that's our warehouse in Mexico. The key metrics that we can use is the number of items processed daily, inventory turnover rate, frequency of stock situation. The benchmark, well, what's the criteria? Company established benchmark. That's it. For inventory turnover and maximum acceptable stock out. That's it. We're using our benchmark. So that benchmark could be anything. We could use an industry benchmark. We can use a competitor. And here we're just using our benchmark. Now, the sources of evidence will be the inventory turnover report at the company, the stock level records, and the stock out incident log. So we don't want to have a lot of stock out incident log. That could be, one of the key matrices. We don't want to kind of run out of inventory. So this is operation audit or operational audit. Compliance audit, as the word compliance suggests, you are complying with certain rules. Well, a compliance audit checks if the auditee, the company that's being audited, the business, adheres to certain rules or regulation or guidelines, usually set by either an outside party or some sort of a higher authority. What could be some example of a compliance, just to kind of get our heads wrapped around this? Well, checking to see if the staff, is the accounting staff, following company procedures. Are we in compliance? Are you following company procedures? Verifying if we are meeting the minimum wage laws. Are we paying our employees the minimum wage? What we do is we bring a company or an auditor, and that's going to audit our payroll processes to make sure we pay the minimum wage. Or it could be reviewing contract with lenders to make sure they are adhering to loan covenant. And we did a lot of compliance audit like this. Basically, the bank is asking us to review the loan agreement with the business to make sure they are meeting the loan covenant. What does that mean? It means when the bank lend money out, so we have the bank and we have the client. The bank lend money out to the client. Now, the bank want to protect their interests. So what they do, they impose conditions, what we call loan covenant, on the client. For example, the current ratio should not fall below 2. For example, their retained earnings should not fall below 500,000, $500,000, to protect the lender, so on and so forth. So what they do, they hire CPA to conduct a compliance audit to make sure the contract, reviewing contract with lenders for adherence to loan covenant. Make sure the business is adhering to loan covenant. Also, you could be assessing if a mortgage bank, if a bank follow the new government regulation. If there's a new government regulation about lending money, well, the bank might hire the auditor to do a compliance audit. And what's the compliance audit? Are we adhering to government regulation? Now, the auditor will have to understand what are the government regulation. For example, the FDIC, the Federal Deposit Insurance Company, might be imposing those rules, but we have to know what they are. Therefore, we can assess whether the bank, the mortgage bank, is in compliance. Compliance audit could also be applied, and I did this in the real world, on government entities like school district, because they receive money from state government and federal government. Because when they receive this money for a particular purpose. They want to comply with this purpose. So the state government or the federal government will ask an auditor to conduct a compliance audit to make sure they are complying. Also, nonprofit organization need to have compliance audit. Same thing we did where I used to work in my audit firm. We did a lot of audit that's compliance in nature to make sure the nonprofit is doing what? Is complying with their donors. Sometimes the nonprofit receive money from the federal government, for example, for housing, to help low-income people with housing. Then we have to make sure that the organization is in compliance. For example, they are giving this money or they are helping people who are in need. How do we know this? Well, we need to take a look at their application, the income tax return of the people that they are helping. Does it meet the requirement that the government is imposing? So this is what we call compliance audit. Also, compliance audit are usually reported to management. This is who's responsible for this. The main group interested in adherence to procedures and regulation. If it's a procedure within the company, well, you give this to management. Sometimes it also goes to outside parties. Now, so many of these compliance audits are done by internal auditor, but not necessarily. Not every internal audit is done by, and not every compliance audit is done by internal auditor. And not every internal auditor, everything that what they do is compliance. You have to take a look at the engagement itself. Okay. For example, when the IRS checks for compliance, that's a compliance audit. When they check your tax return, that's a form of a compliance audit. They want to make sure you are complying with the IRS regulation. An example of a compliance audit will be if a company is adhering to environmental regulation regarding waste disposal. That's the objective. What do we look at? The amount and type of waste disposed, disposable method and frequency. The benchmark could be legal, environmental, and waste disposal regulation, local or federal. And the source evidence will be the waste disposal logs, environmental inspection report, and waste management. This will be a compliance audit. Could this be done by a CPA? Sure, it could be done by a CPA, or it could be done by something who's not a CPA. Nevertheless, it's a compliance audit, but auditors can't do that. CPAs can do that. Let's take a look at the financial statement audit, and this is the audit that we are most interested in. This is the audit that we study about in this course, in an auditing course. A financial statement audit assesses the financial statement, whether they comply with a specific criteria. For example, in the US, which criteria do we use? Generally accepted accounting principles, or IFRS. Now, we could also use other bases of accounting, like cash basis of accounting. We could be using any type of a basis to identify material errors or misstatement. Now, when you conduct an audit, again, you have to understand the client industry, you have to understand its regulatory environment, you have to understand its external relationship, you have to understand the business strategies, processes, and associated success factors is crucial here. You have to learn about the company. And this is what we learn about, how to conduct an audit. There's an audit planning phase where you learn about the company. So before you start an audit, you want to understand the client, the industry, the economic environment in which they operate, their competitive edge, their competitive environment, so on and so forth. And this insight, this knowledge helps auditor pinpoint business risks, because that's what they are concerned with, that's impacting the accuracy of the financial statement. Because at the end of the day, we're looking for what? Errors and material errors and fraud. An example of a financial audit will be auditing the financial statements of Tesla company. Well, we're looking at their financial statement and following the standard is GAAP. We're looking at evidence, source of evidence, invoices, bank statements, sales record, third-party confirmation, so on and so forth. Let's take a look at this multiple choice questions from Farhat Lectures. That's going to help us determine which one of these options, which one of the following audit is considered a compliance audit in general. Well, let's take a look at D. The Government Accountability Office auditor evaluate the computer operation of the governmental unit. Is this a compliance audit? What are we looking at here? We're looking at their computer operation, whether it's, what do we look for? Whether it's working properly, efficiency, effectively. We're not looking at compliance. We're not looking to see if it's following certain higher authority. So what type of engagement is this? D. Well, I would say this engagement is operational audit. OP, operational audit, or operational audit, which is the first audit that we looked at. C is easy. Audit of public company by a CPA. This is a financial audit. So C and D are out. We are left with B and A. Let's look at B first. A review of the company's payroll authorization procedures by internal auditor. Well, we learned that a lot of compliance could be done by internal auditor. But is this a compliance audit? No, this is not a compliance audit. A compliance audit, you have to have an outside authority. All what you're looking at is the payroll authorization procedures. It's some sort of an operational function within the company. So B is out. By process of elimination, A is the answer, but let's see if A is indeed the answer. Determining whether a client's compliance, notice the word compliance is there, so that's help, with that covenant has been met. So again, when the business borrows money, when they borrow money from the bank imposes conditions. Those conditions are called debt covenants or loan covenants. Well, the bank might ask an auditor to conduct an audit on the company to make sure they are in compliance with the debt covenant. And that's considered a compliance audit. What should you do now? Go to Farhat Lectures, look at additional MCQs, true, false, resources. That's going to help you succeed in your auditing course, or if you are trying to be a CPA, studying for your CPA exam. And this should be your goal as an accounting student. Good luck, study hard, and of course, stay safe.